Hi, it is Tuesday morning, 6th of August, and it is 8 a.m. in New York. The Dow Jones Industrial Average and the S&P 500 suffered their sharpest declines in nearly 2 years, as growing concerns about the U.S. economy rocked global stock markets.
Good morning. This is Drips Media, Lid from New York. Drips Media, the revolutionary digital service that transforms the way you stay informed. With Drips Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, Drips News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with Drips News.
All three major indices closed sharply lower for the third straight day. The Dow Jones Industrial Average fell by 2.6% to close at 38,703.3. The S&P 500 dropped 3% to finish the session at 5,186.3, and the tech-heavy NASDAQ composite tumbled 3.4% to end the day at 16,200.1. This marks the third consecutive day of losses for all three indexes, signaling a potential shift in market sentiment after a strong run in recent months. Investors are grappling with a confluence of factors, including persistent inflation, the prospect of further interest rate hikes from the Federal Reserve, and growing concerns about a potential economic slowdown. The sell-off extended to the tech sector, with Apple, Google, and Microsoft all closing significantly lower. Apple fell 4.8% to close at $209.30, reversing its previous day's gains. Google dropped 4.5% to finish at $159.30, marking its third consecutive day of losses. Microsoft also experienced a downturn, falling 3.3% to close at $395.20, extending its losing streak to 5 days. These losses in the tech sector, which often serves as a bellwether for market sentiment, underscore the broader concerns weighing on investor confidence. The combination of persistent inflation, the Federal Reserve's hawkish stance on interest rates, and growing recession fears is creating a challenging environment for equities. As investors navigate this uncertainty, it remains to be seen whether this downward trend will persist or if the market will find its footing in the coming days. The semiconductor sector also felt the heat, with Nvidia closing down 5.2% at $503.90. This decline comes after a period of significant growth for the chipmaker, driven by the surge in demand for AI chips. However, the current market downturn has raised concerns about a potential slowdown in demand, impacting even high-flying tech companies like Nvidia. Despite the broad-based sell-off, there were a few bright spots in the market. Energy stocks showed resilience, buoyed by rising oil prices. ExxonMobil gained 1.2% to close at $108.60, while Chevron rose 0.8% to finish at $165.70. The energy sector has been a relative outperformer this year, benefiting from elevated energy prices amid geopolitical tensions and supply chain disruptions. Looking at Apple specifically, the tech giant has now recorded 5 days of gains over the last 10 trading days. However, the stock's month-to-date and year-to-date performance paints a more mixed picture, with declines of 5.8% and a gain of 9% respectively. This contrast highlights the recent volatility in Apple's share price and the broader market uncertainty. Amazon also experienced a significant decline, with its shares falling 4.1% to close at $161. This marks the third consecutive day of losses for the e-commerce giant, adding to the growing concerns about the health of the consumer discretionary sector. Meanwhile, Meta Platforms, the parent company of Facebook, saw its shares drop 2.5% to end the day at $475.70. This decline marks the second consecutive day of losses for Meta, as the social media giant continues to grapple with slowing advertising revenue and increased competition. Nvidia extended its losing streak to 3 days, with its shares plummeting 6.4% to close at $100.50. The chipmaker's decline comes amid a broader sell-off in the tech sector, fueled by concerns about slowing economic growth and its potential impact on demand for semiconductors. Meta's decline in recent days follows a broader trend in the tech sector, as investors weigh the impact of a potential economic slowdown on future earnings. Despite this recent dip, Meta has shown resilience over the past month and year, with its shares up 0.2% month to date and a remarkable 35% year to date. This suggests that while short-term market fluctuations are impacting the stock, investors remain optimistic about Meta's long-term prospects. It's worth noting that Meta has experienced 4 days of gains over the last 10 trading days, indicating some degree of volatility in its share price. This volatility underscores the current uncertainty in the market as investors grapple with a complex economic landscape. The coming days will be crucial in determining whether this downward trend in the tech sector will continue or if the market will rebound. Factors to watch include upcoming economic data releases, corporate earnings reports, and any further developments regarding interest rates and inflation. The financial sector also faced significant headwinds, mirroring the broader market downturn. Bank of America closed at $36.70, reflecting a drop of 2.5% and marking its fourth consecutive day of losses. Similarly, JP Morgan experienced a decline for the fourth straight day, falling 2.1% to close at $194.90. MasterCard, a key player in the payments industry, witnessed a substantial decline of 4.3%, ending the day at $442. This marks the third consecutive day of losses for the company. Morgan Stanley also faced selling pressure, closing at $92.10, a 3.9% drop, marking its third consecutive loss-making session. Visa, another major player in the payments sector, saw its shares fall by 3.8% to close at $256.40, reversing 6 days of gains. This reversal highlights the increasing investor concern regarding the stability of consumer spending amid growing economic uncertainty. The downturn in the financial sector underscores the broader market anxiety regarding the impact of potential interest rate hikes and a slowing economy. As key players in the global financial system, these institutions are often seen as barometers of economic health, and their recent performance reflects the growing apprehension among investors. This negative sentiment extended to other financial giants as well. JP Morgan Chase closed at $194.30, down 2% for the day, marking its fourth consecutive day of losses. The company has seen a 5-day decline of 8.7% and a month-to-date loss of 7.4%, despite a year-to-date gain of 11.8%. However, JP Morgan has experienced only 1 day of gains over the last 10 trading days. MasterCard, a bellwether for the payments industry, cryptocurrency fell 4.3% to close at $442, marking its third consecutive day of losses. The company has declined by 8.1% over the past 5 days and 6.8% for the month. Despite these recent losses, MasterCard is still up 15.4% since the start of the year. Looking at the short-term performance, MasterCard has recorded 3 days of gains over the last 10 trading days. Morgan Stanley also felt the pressure, closing down 3.9% at $92.10. This marks the third straight day of losses for the investment banking giant. The stock is down 9.6% over the past 5 days and 7.9% for the month, but still holds a year-to-date gain of 6.1%. Over the last 10 trading days, Morgan Stanley has only experienced 2 days of gains. Turning our attention now to the cryptocurrency market, we saw some relief from the recent downward trend. Bitcoin, the world's largest cryptocurrency by market cap, rose by 1.6% to close at $54,833.60, snapping a 4-day losing streak. Ethereum, the second largest cryptocurrency, also saw gains, rising 1.7% to finish the day at $2,457.30. This positive movement reversed 7 consecutive days of losses for Ethereum. Dogecoin, often seen as a barometer of retail investor sentiment, jumped 2.1% to close at 10 cents, breaking a 10-day losing streak. This suggests that despite the broader market uncertainty, retail investors may be seeing some buying opportunities in the crypto space. These gains in the cryptocurrency market could indicate a potential decoupling from the broader stock market as investors seek alternative assets in the face of economic uncertainty. However, it remains to be seen whether these gains will hold or if the crypto market will succumb to the same pressures weighing on equities. Hi, it is Tuesday morning, 6th of August, and it is 8 a.m. in New York. The Dow Jones Industrial Average and the S&P 500 suffered their sharpest declines in nearly 2 years, as growing concerns about the U.S. economy rocked global stock markets.
Good morning. This is Drips Media, Lid from New York. Drips Media, the revolutionary digital service that transforms the way you stay informed. With Drips Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, Drips News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with Drips News.
All three major indices closed sharply lower for the third straight day. The Dow Jones Industrial Average fell by 2.6% yesterday to close at 38,703.27. The S&P 500 dropped 3% to end the session at 5,186.33, while the tech-heavy NASDAQ composite tumbled 3.4% to finish at 16,200.08. This downward trend reflects growing investor concern over rising interest rates and their potential impact on corporate profits. The Federal Reserve's commitment to curbing inflation has led to expectations of further rate hikes, fueling uncertainty in the markets. Adding to these concerns are ongoing geopolitical tensions and lingering inflationary pressures. Investors are closely monitoring economic data for signs of a potential slowdown, seeking clarity on the future direction of both the economy and monetary policy. Tech giants also took a hit in yesterday's trading session, further illustrating the market's downturn. Apple saw its shares plummet 4.8% to close at $209.30, reversing the previous day's gains. This decline comes amidst growing concerns about consumer spending in the tech sector. Google, another tech heavyweight, experienced its third consecutive day of losses. The search giant's shares fell by 4.5%, ending the day at $159.30. This continued downward trend suggests investors are increasingly wary of the impact of rising interest rates on Google's advertising revenue. Meanwhile, Microsoft shares continued their losing streak, falling for the fifth straight day. The software giant's stock closed at $395.20, marking a 3.3% decline. This prolonged downturn reflects broader concerns about the tech sector's growth prospects in a high-interest rate environment. These significant drops in the tech sector, which carries substantial weight in the market, further underscore the widespread pessimism among investors. The combination of rising interest rates, geopolitical uncertainty, and inflationary pressures continues to weigh heavily on market sentiment, leaving investors searching for signs of stability and a potential market rebound. Outside of the tech giants, the broader market reflected similar anxieties. The Dow Transportation Average fell by 2.1%, indicating a decline in economic activity, as measured by the movement of goods and services. This decline suggests that investors are concerned about the potential for an economic slowdown in the near future. Furthermore, the CBOE Volatility Index, also known as the VIX, surged by 8.5% to close at 24.6. This index, often referred to as the market's fear gauge, measures the expected volatility of the S&P 500 index over the next 30 days. The sharp rise in the VIX indicates heightened investor anxiety and uncertainty about the market's direction. Despite Apple's recent downturn, the iPhone maker has seen positive momentum over over the past 10 trading days, with 5 days of gains. However, the stock's 5-day, month-to-date, and year-to-date performance all remain in negative territory, reflecting the broader market's volatility and the challenges facing the tech sector. Amazon also felt the heat, with shares dropping 4.1% to close at $161.02. This marks the third consecutive day of losses for the e-commerce giant, signaling continued investor concern about its growth prospects amidst a potential economic slowdown. Meta Platforms, the parent company of Facebook and Instagram, wasn't spared either. The social media giant saw its shares decline by 2.5% to finish at $475.73, marking its second straight day of losses. This downturn suggests that investors are cautious about the company's future earnings potential in light of the current market climate. Chipmaker NVIDIA continued its downward trajectory, with shares plummeting 6.4% to close at $100.45. This marks the third consecutive day of losses for NVIDIA, underscoring the widespread pessimism surrounding the tech sector and its vulnerability to rising interest rates. Tesla's shares also took a hit, closing at $245.34, down 3.2% for the day. This marks the electric vehicle maker's fourth consecutive day of losses, adding to a month-to-date decline of 2.8%. Despite these recent struggles, Tesla's stock has seen a significant year-to-date gain of 92.5%, highlighting the volatile nature of the current market. Looking at Meta Platforms, despite the recent 2-day losing streak, the social media giant has fared relatively well over the past 10 trading days, with 4 days of gains. Furthermore, Meta Platforms has experienced positive returns for the month-to-date and year-to-date periods, up 0.2% and 35% respectively. This suggests that despite the current market turbulence, some investors remain optimistic about the company's long-term prospects. The financial sector also mirrored the broader market downturn, with major banks and payment processors experiencing significant losses. Bank of America saw its shares drop 2.5% to close at $36.70, marking 4 consecutive days of losses. Similarly, JP Morgan Chase experienced a 2.1% decline, closing at $194.90, also marking its 4th straight day in the red. Payment processing giants MasterCard and Visa were not immune to the sell-off. MasterCard shares tumbled 4.3% to end the day at $442, marking 3 consecutive days of losses. Visa, meanwhile, saw its shares fall 3.8% to close at $256.40, reversing 6 days of gains. Morgan Stanley, another financial heavyweight, experienced a 3.9% decline, with shares closing at $92.10. This marks the 3rd consecutive day of losses for the investment bank, reflecting the broader pessimism impacting the financial sector. Adding to the gloomy picture, American Express shares plummeted 2.7% to close at $225.90, marking 3 consecutive loss days. This decline suggests that investors are concerned about the potential impact of an economic slowdown on consumer spending, a key driver of revenue for credit card companies. This negative sentiment extended to the financial sector as Bank of America's shares fell further, closing at $36.70, a drop of 2.5% for the day. This marks the 4th consecutive day of losses for the bank, with a significant 10.8% decline over the past 5 trading days. The month-to-date performance for Bank of America has also been challenging, with a loss of 9.1%. Despite these recent struggles, the bank has managed a 10% gain since the beginning of the year, highlighting the volatile swings experienced in the market. However, with only one gain in the last 10 trading days, investor confidence in Bank of America appears to be waning. Turning now to the cryptocurrency market, we saw a glimmer of hope amidst the broader market downturn. Bitcoin, the world's largest cryptocurrency, reversed 4 days of losses, closing at $55,155.70, a gain of 2.2%. This suggests that some investors may be seeking refuge from traditional markets in the relative stability of digital assets. Dogecoin, often seen as a bellwether for retail investor sentiment, also showed signs of life, reversing 10 days of losses to close at 10 cents, a 2.6% increase. This could indicate a resurgence in risk appetite among some investors, despite the prevailing market uncertainty. Ethereum, the second largest cryptocurrency, followed suit, reversing 7 days of losses to close at $2,470.40, a gain of 2.2%. This positive performance from Ethereum, which underpins many decentralized finance applications, suggests that the underlying technology and innovation within the crypto space continue to attract investor interest. However, it's important to note that despite this recent upswing, Bitcoin has experienced a significant decline of 15.6% over the past 5 trading days and a 14.6% drop for the month to date. Despite these fluctuations, Bitcoin remains an attractive asset for some investors, boasting a 30% gain since the start of the year. This resilience in the face of market volatility underscores the growing acceptance of cryptocurrencies as an alternative investment class. Dogecoin, often considered a more speculative asset, mirrored Bitcoin's positive performance, closing at 10 cents, a 2.6% increase. This upswing ended a 10-day losing streak for Dogecoin, suggesting a possible return of retail investor confidence. Ethereum, a more established cryptocurrency with a strong focus on decentralized applications, also saw gains, closing at $2,470.40, a 2.2% increase. This positive movement reversed 7 consecutive days of losses for Ethereum, indicating continued interest in the potential of its underlying technology.